Hello everyone and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. For about 6 months, financial markets have been hoping that the weakening inflation will force the Fed to slow down its aggressive rate hike campaign. However, the Federal Reserve has been signaling that rates are likely to stay higher for longer for months. Investors were forced to abandon the soft landing scenario after the Fed said in its forward projections one more rate hike may be needed this year and fewer rate cuts are likely next year. Investors finally embraced the Fed's higher for longer stance and Treasury yields began to rise sharply 2 weeks ago, roiling the stock markets around the world. Moreover, the additional data released suggested that the U.S. economy is resilient and labor market conditions are tight despite the weakening of housing market. So we start with the review of U.S. economy, and manufactured durable goods orders rose, indicating stronger demand from businesses and government. New orders for manufactured durable goods orders increased 0.2% in August from the previous month, the U.S. Census Bureau reported Wednesday. New orders from a year ago advanced 4.2%, and July orders were upwardly revised to a decline of 5.6%. Excluding transportation, new orders increased 0.4%, and excluding defense, orders declined 0.7%. Critically watched as barometer for business spending, new orders for capital goods excluding defense and aircraft orders rose 0.9%, reversing a 0.4% decline in July. Weekly jobless claims data also suggested that the labor market conditions are tight. Initial jobless claims for the week ending September 23rd edged 2,000 higher to 204,000, but stayed near a 7-month low reached in the previous week, the U.S. Department of Labor reported Thursday. Higher mortgage rates and elevated home prices are dampening activities in the housing market finally. New single-family home sales declined 8.7% to a seasonally adjusted annualized rate of 675,000 in August, the Commerce Department reported on Wednesday. Home sales fell for most in 11 months from the upwardly revised 8% jump in the previous month. In other economic news, the U.S. Commerce Department said the real gross domestic product increased at a 2.1% in the second quarter from a year ago. The government report left the growth estimate unrevised after a third and final estimate, but the agency also significantly revised first quarter growth estimate between 2020 and 2022. Benchmark indices rebounded in Friday's trading after core personal consumption expenditure price index, an alternative and diluted measure of inflation, increased 0.1% in August from the previous month and rose 3.9% from a year ago. The data released by the Bureau of Economic Analysis showed monthly core PCE prices, which excludes food and energy prices, rose at the slowest pace since November 2020, and annual core prices eased to the levels last seen in May 2021. Overall, the PCE price index increased 0.4% from the previous month and jumped 3.5% from a year ago. We now review economic news in Europe. In Europe, investors reviewed inflation data and the GDP growth estimates revisions. The euro area consumer price inflation eased to a 4.3% annual rate in September from a year ago, Eurostat reported Friday. Consumer price inflation has been falling every month since October except April 2023, largely because of higher prices in the previous month and weakening energy prices. Consumer price inflation dropped to the slowest pace since October 2021, according to the preliminary estimates released by the statistical agency. The service sector inflation slowed to 4.7% from 5.5% in August, and food, alcohol, and tobacco prices rose at a slower pace of 8.8% from 9% in the previous month. The fall in energy prices accelerated to 4.4% from 3.3% in the previous month. Core rate of inflation, which excludes food and energy prices, slowed to 4.5% from 5.3% in the previous month. On Thursday, Spain's statistical agency said inflation accelerated for the third month in a row to 3.5% in September. Germany's statistical agency said inflation eased to 4.5% from 6.1% in the previous. UK's economy grew at a faster than previously estimated rate in the first quarter of 2023, the Office for National Statistics reported Friday. First quarter GDP growth was revised higher to 0.3% from 0.1%, and second quarter growth was left unrevised at 0.2%. For 2022, the growth estimate was revised higher to 4.3% from the previous estimate of 4.1%. The higher economic growth estimate suggested that the British economy is 1.8% larger at the end of June 2023 compared to the last quarter of 2019, the last full quarter before the onset of COVID-19 pandemic. We now turn our attention to Asia. Economic news in Asia this week were few. Japan said retail sales rose 7% from a year ago in August, and jobless rate was unchanged at 2.7% in the month. China's largest industrial firm said profits soared 17.2% from a year ago in August. Official retail sales and industrial production data showed that early signs of stabilization may be taking root in the second largest economy in the world. Also on Friday, China kicked off its week-long holiday marking the National Day on October 1st. Outbound travel has surged in the so-called Golden Week, the first Golden Week holiday since the international travel resumed. A private survey of 1,300 businesses known as China Beige Book said reports of China facing deflation are highly exaggerated. We now review financial markets around the world. Twin worries of inflation and interest rate path kept financial markets on the edge for the second week in a row. Resilient U.S. economy and tight labor market conditions forced the U.S. Treasury yields to 16-year highs, prompting a sell-off in stock and depressing world financial stock markets. Moody's Investor Service said on Monday that the U.S. federal government shutdown will be credit negative and could hamper the country's AAA rating and push bond yields even higher. Bank stocks were in focus again after higher bond yields deepened the bond portfolio losses. The yen declined to a 11-month low and fell to the level not seen since 1990, prompting fears of a government intervention. The dollar index, which tracks the prices of U.S. dollar against major currencies, extended weekly gains to the 10th week in a row and rose to a 6-month high on expectations of higher U.S. interest rates. Stock markets in Europe turned down for the second week in a row after global bond yields advanced and the euro drifted lower. Stock markets in Japan, India, and Hong Kong fell for the second week in a row after global bond yields advanced. Crude oil prices rose to one-year highs and extended gains in the month after Russia and Saudi Arabia extended voluntary production cuts, and the U.S. inventories fell sharply at a major hub in Oklahoma. China's property market woes deepened after Evergrande Group struggled to restructure its debt. Let us look at stocks in the news. We begin with the stocks that moved high. Nike jumped almost 8% after the athletic shoes and sportswear maker reported mixed quarterly results and guided sales to rise in mid-single digit in the current fiscal year. Blue Apron Holdings Inc. almost doubled to over $12 after the mail kit company agreed to be acquired by Wonder Group for $13 a share. Costco Wholesale Corp., the membership warehouse retailer, said net sales and net income increased 9%, and comparable company-wide sales, adjusted for gasoline prices and foreign exchange, increased 3.8%, and the U.S. comparable sales rose 3.1% from a year ago. Target Corporation said it plans to close 9 stores in several states after repeated theft incidences, store violence, and crime. The retail chain said it will shutter stores in New York City, Seattle, Portland, and San Francisco, Oakland area. GameStop Corp., the computer game retailer, appointed activist investor Ryan Cohen as the company's chief executive officer immediately. Thor Industry, the RV maker, reported revenue declined 28% in its latest quarter and forecasted weak sales in the next fiscal year. We now review stocks that are moving down. Vail Resorts, the ski resorts operator, said revenue in the fiscal fourth quarter ending in July increased, but net loss expanded on higher operating costs. Micron Technology, the advanced chip maker, reported smaller than expected loss in the fiscal fourth quarter compared to the previous quarter, and the company offered weak revenue outlook. CarMax Inc., the used car dealer, reported mixed quarterly results on the weakening demand for used vehicles. Total retail used vehicle sales declined 7.4% to 225,000 units, and comparable unit sales declined 9% from a year ago. Concentrix Corporation, the business service provider, soared despite the customer engagement services provider reported weaker than expected sales and earnings. Amazon Inc., the online retailer and marketplace operator, was sued by the Federal Trade Commission and attorney generals of 17 states and accused the company of monopoly power and charging higher prices for customers and unlawfully excluding rivals. United Natural Foods dropped more than 20% after the company reported weak quarterly results and forecasted weakness to persist in the current quarter. Looking ahead on the economic front, investors are looking ahead to the release of U.S. jobs report and job openings report and manufacturing surveys, foreign trade data, and factory orders. Inflation data from Switzerland, Philippines, South Korea, and Turkey will also dominate headlines. India, Australia, and New Zealand are set to announce their rate decisions. Germany and France are also set to release their foreign trade data, and Italy and Spain will release jobless rate estimates this week. You can read daily U.S. and global market updates, stock movers, and economic updates on ticker.com and 123jump.com. We will see you next time.